Okay, so now we are going to practice the question of the ratio, and the question which I have chosen is of 7110 November 15 P22Q4, and the title of the question is Danish. Now, for those students who do not have this question, I would request them to please look up online, download this question paper, do read this. For the rest of the class and for those who have the past papers, please open the question, read the question once before watching this video so that you can have better understanding. The relevant information which is given in the question is of revenue, and the revenue is 3,80,000. And the other things are, we have purchases, profit for the year, we have purchases, we have profit, we have uh, gross profit margin, GP margin, and the values for these are 295, 35, 2,95,000, 35,000, and 25%. And after that he says that at 31st July, now these are the closing values, 31st July 2015, what are the additional informations? The inventory is 65,000, trade receivables are 42,000, trade payables are 52,000, and bank is 13,000 debit, and expenses accrued are, they are 8,000. Now this is the data given, this is the whole data, and the requirement of the question is that you have to calculate inventory at 1st August 2014. Calculate inventory. Now C class, at which date? 1st August 14, it means the opening inventory. Now there is no other information available for this specific thing. That's why what I said, that you should have a very strong and sound understanding of the income statement. You must have the sound understanding of the income statement. Now what I'm going to do is I'm going to use the concept of income statement in ratios. How? I'm going to prepare trading section of the income statement. What do? We write revenue, and then after that we write cost of sales, and cost of sales we write opening inventory plus purchases minus closing inventory, and that's cost of sales. And here it is, I'm going to draw two columns, and what do we have at the end? We have gross profit. Now I know what the revenue is 3,80,000. I know what are the purchases are 2,95,000. I know what is the closing inventory, that is 65,000. But I do not know what is the opening inventory. Opening inventory is unknown. And at the same time, what I know is that I have the gross profit, and the gross profit percentage is 25%. Now, what is this? This is GP margin. Now, if you do remember, we have already done what a GP margin is. What is the formula for GP margin? The formula for GP margin is gross profit over revenue into 100. Now, what I'm going to do is I'm going to use the ratio methodology, or the technique, or the mathematics over here, to calculate gross profit equals to 25%. Now, this is 100. The revenue is 3,80,000. What I'm going to do is I'm going to rearrange. GP equals to 25. Revenue was 3,80,000. This is being divided over here. When I'll take it to over there, it will be multiplied into 3,80,000 over 100. Now what I'm going to do is I'm simply going to solve this, and the answer would be, I need to calculate GP would be okay. Now I'm going to cut it, solve it, and the gross profit would be $95,000. Now gross profit is $95,000. What I need to find is opening inventory. Still I haven't found opening inventory. What I'm going to do is To find opening inventory, I must have cost of sales. Now, what is cost of sales? I do not know, but I do know one more thing. Now, that thing I know from my income statement, the equation of gross profit. This is revenue minus cost of sales equals to GP. Now, what I am going to do is I am going to calculate cost of sales. Cost of sales equals to revenue minus GP. I have rearranged this. I have rearranged this equation. I have taken R over there. It was minus cost of sales equals to GP minus revenue, and then I have deducted minus sign with the minus sign, and I have received this equation. Now the cost of sales is unknown, but revenue is 3,80,000, and the gross profit is 95,000. 380 minus 95, what do I have is 2,85,000. Now 2,85,000 is my cost of sales. Now still I have cost of sales, but I do not have opening inventory. What I'm going to do next is I'm going to once again make one more equation. And once again, this equation is once again from that income statement, the prior knowledge of accounts. That is cost of sales equals to opening inventory plus purchases minus closing inventory. The cost of sales is 2,85,000. Opening inventory is unknown, let it be X. Purchases are 295 and closing inventory is minus 65. What I am going to do is I am going to once again rearrange this. This is plus 295 and I'll take it to the left hand side. It will be 285 minus 295, and then this is plus 65 and I'll take it to the left hand side. It will be plus 65 equals to X, and when I'll add up all this, I'll get X, which is $55,000. So my opening inventory is of $55,000. Now continuing to the same question, after this what I'm going to do is I'll put this sheet over here because we will be using this for the future references, for the future cross references. Now what I need to do next is, the next requirement of the question is you need to calculate rate of inventory turnover. What you need to calculate is rate of inventory turnover. Now what is the formula for rate of inventory turnover? The formula for rate of inventory turnover, once again we have already we have already learned that in our previous videos. So the rate of inventory turnover is cost of sales over average inventory. Now average inventory is opening plus closing divided by 2, and cost of sales we have already calculated it in the last part, which was 2,85,000. Now what I am going to do is I am simply going to add the values. Cost of sales is $2,85,000 divided by, what is my opening and closing inventory? Opening inventory is my $55,000 plus closing inventory is $65,000, and I'm going to divide it by 2, and that's it. So what do I have is 285,000 divided by 55 plus 65 divided by 2, $60,000. And then what is the final answer once I do it on the calculator? And the answer I get is 4.75. Now will by just writing 4.75 I'll get full marks? The answer is no. I need to write one more thing in front of it, which is times. You do need to mention that this is 4.75 times 75 times. Now after that the question is expenses paid in the year ended 31st July 2015. The next part is expenses. Now class, once again using the prior knowledge of income statement, I am going to solve this question. After gross profit, what do? We simply subtract expenses. Now I do not know what the expenses are, but I do know one thing. What is that? That the expenses my profit for the year. I know one more thing, which is profit for the year. Profit for the year is $35,000. Now if my gross profit is $95,000 and my profit for the year is $35,000, what has reduced my profit from 95 to 35? That is definitely one thing, which is expenses. Once again, I am going to come up with one more equation. Now you see, I have not memorized all these equations. This is just the knowledge of income statement which I am using over here. How I am going to solve this? It is like this: GP minus expenses equals to profit for the year. I need to find expenses. GP, profit for the year, is on the right hand side of the equation. I'll take it to the left hand side of the equation. GP minus profit for the year equals to expenses. Now GP is $95,000, profit for the year is $35,000, and that's is expenses, and the expenses are $60,000. Now you see, class, you need to understand one thing: expenses are 60,000. This is the right answer, but the requirement for the question was expenses paid during the year. The total expenses are $60,000, but you haven't paid 8,000. It is accrued. So what you have actually paid is, it is $52,000. Now once again, this is the concept of income statement of accruals and prepayments, that the total expenses for the period were 60,000, but 8,000 were not paid yet. So the cash paid in the capacity of expenses were 52,000. The next ratio is working capital ratio, the other name of current ratio. The other name of current ratio. The formula for this is current assets over current liabilities. Now I'm simply going to highlight my assets. Inventory of $65,000 plus trade receivables of $42,000 plus bank of $13,000, and I'm going to divide it by current liabilities. Now trade payable for $52,000 and plus $8,000 of the expenses which are accrued, which are not paid yet. So by solving it, what I get is, I get 1,20,000 over 60,000, and the answer is 2. Will I get mark for this 2? The answer is no. I won't get marks for this 2. What I need to do is, I need to write 2:1. Now I'll get mark for this. And the last thing of this question is quick ratio. Quick ratio. Now, how to find the quick ratio? Once again, you need to write current asset, and these current assets should be except inventory divided by current liabilities. Now, the current assets without inventory are, I won't be writing this 65,000, but I'll be writing the rest of these. Those are 42,000 plus 13,000 divided by 52,000 plus 8,000. What do I get is, I get 50 into 60,000 and 55,000. And once we calculate it, what do we have is, we have 0.92. Now once again, I won't get marks for this 0.92. I'll simply write over ratio 1. Now is when I'll receive the marks. This question was for 12 marks. Now class, you need to understand, only those students are going to understand this, those who have done this whole question with me on their notebooks with their hands, who have studied. Rest won't understand it. You need to practice it. I often say one thing, that I listen and I remember, I see and I forget, I listen and I remember, I do and I understand. My dear, you need to do the questions by yourself to understand them. Thank you. Have a good day.